this is going to work. I've never had this kind of issue with YouTube before. I do apologize for delays here. There we go. Now it says we're live. Okay. Let me get the disclaimer back up on the screen. I apologize for the technical difficulties, everyone. There you are. All right, try it one more time. Welcome to the Bullish Bears YouTube channel. I have the legendary Matthew Tuttle with me, as promised in our preview. And this is the man behind the SJIM and LJIM ETFs. We're here to throw a little shade at Jim Cramer and maybe drag him into the ring and beat him up a little bit. We'll leave him standing when he's done. He's still got to put a show on, so we got to make sure he's up for that. But in the meantime, we're going to have some fun and start digging through his call-out list. How you doing this morning? Oh, did I lose you? Matthew, are you there? Oh, that is so strange. I lost audio on my side. Technical difficulties, guys. Apologize. Gotta love technology. Well, do I have anything now? Let me see here. I got no audio on my end. Oh my gosh. Oh, this is just never ending. Oh, apologies, guys. Very weird. Let me see if I can just maybe restart the call. I apologize for that. I'll be right back. Can you hear me now? I've still got nothing. Wow. Well, go figure. I don't understand why I don't have any audio. There's no reason I shouldn't. Is maybe a microphone on your end muted by chance? There should be a...
Hear me now?
Hey, I can hear you now. There we go. Gotcha.
Okay.
Thank God. We got through that one. All right.
All right.
Again, we're here to throw some shade at Cramer. Let's get it going. Now we're already running
All
late.
right, let's go.
Okay. So we were talking a little bit about the merger situation with Cisco, and they're buying somebody. And I know Jim was jumping on about it. Splunk. Wow. Let's dig into that for a moment. Cisco is CSCO, I believe. And yeah, that's money's coming from somewhere for sure. Let's see how many investors are getting soaked in the Cisco game. Pretty much got a support level right there around 51.70 if things look good, but there's a lot more where that came from. I think at least we'll pull back, and that's just half of this trend. So maybe we'll get lucky and have a bull move out of this after it settles. But man, what a short today, huh? Look at that gap down. Sweetness.
Yeah. No, you're not happy if you own Cisco. You are happy if you own Splunk, though.
I'll bet.
Few guys on Twitter got that one.
Nice work. That's a pretty good one, and this kind of taps back into that old Apple buying Disney rumor that keeps reviving itself every year. Who knows? But when it does happen, if it does happen, it'll take a chunk out of Apple the same way. But Disney will be great. Who knows? That thing keeps getting kicked and beaten into life every time it lays down. So we'll see how that goes. And I'm sure Jim will be right there to jump up and down about it and start saying, bye, bye, bye.
I am sure.
All right. So we're looking at a couple of things. We're looking at mainly old Jimbo's list of top 10 things to watch in the stock market. And I'm looking at yesterday's publishing just so we can kind of redo it. We missed out yesterday. The stream did not go live to YouTube for some darn reason. And, well, today, by gosh, it seems to be working. We'll make it actually work today. In spite of the technical difficulties we've already had, it should be working fine. I show 4 viewers currently and more coming because we put out an ad for it. Cool. All right, well, thanks for joining us. And let's get going. The first thing, of course, Jim took a look at the whole FOMC thing. Yesterday, if you were with us on our YouTube channel live, we traded that and did very well. Kevin and I made some killer call-outs. I had a pretty nice little 18-point day in futures yesterday. And when we go live and we team up like that and it just goes smooth, man, it's just amazing. We traded. We knew exactly where the liquidity zones were. We knew exactly where the supply and demand zones were when they cracked. Going into FOMC, man, it was just beautiful. Just short it, repeat these bear flags, and keep going. It was awesome, right up to the bell. Did very well with that. And then also got a lot of very high-speed education to our many members as far as teaching how to take these positions and how to read that price action and take advantage of it. Jim was kind of saying that he was a little concerned about some of the things, with old J Powell coming to the podium. We know how Papa Powell loves to move the market. And more or less, he was kind of, I can almost say he was kind of, just not really very animated about it more than anything. He just kind of blew it off like everyone else would. I would say analysts tend to not want to touch FOMC, and there's a good reason for that. Knowing where liquidity is today, we've got kind of a setup to maybe go a little lower. We could probably see about 432.20 is a pretty good target. It's an old demand zone down here that we could possibly hit, but we'll have to see if this level cracks first. As far as the S&P goes following through, but overnight, man, that was a pretty nice short right through a known liquidity zone. This shaded area is just July 7th candle wick, and that has been beautiful for playing liquidity. As soon as it cracked that this morning in the pre-market, man, it was just a nice, clean, measured move down to our open. We got a couple of nice swings out of day trading the open today, and now we're just waiting until that midday move. Moving forward, we want to talk and throw a couple things over Jim's head there. And the first thing we got to yesterday when we were talking was oil. And, looking at one of his favorites was PXD.
Yep, PXD is his favorite, and it's not having a very good day.
No, sir. And we were certainly talking about being bearish on this. And, man, we knew exactly where targets were and everything. We're all over that. But, yeah, he was saying that, oil's looking to go to $100 and, we just kind of shake our head and go, I don't think so, Jim. It's leading up to an election year. Come on, man, get with the program. Hit our short target pretty nicely. I wish we would have got the broadcast out. Maybe some of our viewers could have picked up on that too, but we knew.
Well, if anyone owned SJIM is short PXD, so.
Very cool. And hey, SJIM's actually doing pretty good right now, so I'm loving it.
Up 1.2% today.
Rolling on. And, once we get a little more volume in there, and that'll really start picking up. But the asset management is doing very good work with keeping both SJIM and LJIM, in great trading ranges and actually moving for value. Doing very good with that. I gotta, not to pat yourself on the back and break your arm or anything, but doing great with it. Loving it.
Thank you.
Another club favorite we looked at is CTRA, and that got actually a little bit of a let me see here. They kind of bumped the Citi bumped the price target on it by $1 to 27 a share, and let's see about that.
Yeah, good timing.
Yeah, that was a great short target yesterday, and today, wow, that was a good entry. Straight down to the bottom of what? I always point these things out. When I go on the daily chart and I can spot a wick on a candle like this, I know exactly where that liquidity zone is. And that is a little demand zone. And man, it just went right to the bottom of that sucker, just beautifully. I can't always get the broadcast to work right, but man, if we did, yesterday would have been some awesome calls. And again, I do apologize to our audience about the technical difficulties with YouTube there. It just kind of, well, didn't go the way it was supposed to yesterday. I can't apologize enough about that. I'll probably say it one more time. Anyway, moving on. We're kind of picking through some of the stuff pretty fast today because we already had all of our chart dope pretty much laid out. It's kind of fun to be able to deja vu yesterday's get together. We had a great time. We were throwing stuff out there and just got to kind of give Jim a blanket party in the ring there for a minute, man. We were doing great. You got to enjoy that stuff.
I think Jim knows somebody over at YouTube, which was the issue.
That could have been. I would not be surprised there. If you saw it coming, he's like, no, we got to stop this. Who do we call? He was talking about a couple IPOs, and CART, as we know, got kind of beat down. And then he was kind of comparing it to like KVYO and TWLO. And I wanted to point out a couple of things. I mean, TWLO, we know kind of exactly how IPOs tend to work. They tend to get hyped and pumped, and then, wow. Okay. He was, Jim was snapping his arm, breaking his elbow, patting himself on the back about making the call out on that one, saying it was bullish, and it did pretty good. But everything kind of gets capitalized after a while, and this is basic market structure. And man, that reversal was pretty clean. As soon as it cracked that support level, like a fallen tree, man, and everybody heard it crack. Looking at support levels here, can we get long on that? Let's wait and see what happens with this. I mean, it still has that. It looks like a bear flag. Walks like a duck, talks like a duck. Maybe it'll go a little lower. But as far as IPOs go, and when you hear excitement about that stuff, it's mostly fluff pushing it up. It's mostly speculation. And a lot of these companies can be great. They could do great things. But capitalization and market structure are just fundamentals. We've seen it 100 times. We're probably going to see it a million more. What are your thoughts on his call out on the Instacart thing? That was pretty wild. And then we looked at another one too.
Well, yeah, he didn't. I didn't see him take a direction on Instacart. He did take a direction on ARM.
That's right.
And he top ticked that one. Told people to buy a little bit of it. So we shorted a little bit of it. So far, so good. Cavo was another one. He was positive that lost people a lot of money. He did just flip negative. So far, he's been right on the negative, but still didn't make up for the positive call. So he was salivating all over Cava.
And ARM here, man, that was a hell of a drawdown.
He top ticked ARM. That was typical Jim.
I really hope a lot of people didn't fall into for that, because I mean, not that it was a trap by Jim. It's just a bad call. But I mean, you start, following analysts around, and 9 times out of 10, you're going to get into trouble. Looking at this thing for price action's sake, I mean, it was a clean, nice, measured move up on the open. Did very well. Closed right at a specific point, went even higher, and finished a full-on 100% move above that, and then absolutely top ticked. I guess when he comes out, it's like 9 o'clock. Started talking about it. Oh man, that was just right down to support in the pre-market, and it made a nice little run up on the opening bell. People kind of flew into that, trying to buy Jim's call, and then all of a sudden, man, it just the traders who knew exactly where to short that, and man, it just picked it over, and then it flowed down after the close. It's just nasty, nasty, nasty looking. Where will this thing stop? Nobody knows. We don't have any prior data to its opening day, but we do know that this is looking like, since we didn't have this information yesterday, if we put this as our primary move, come across consolidation there, and pick off a secondary move, let's see if we can make a target and see if it hits. Oh my gosh, if it makes a full 1-for-1 down, yikes. can we say $39.50 or so? Ouch. Well, it's moving. It's in that upper third, and if it hits the halfway point, I'll be impressed. So 47 would be a good bear target probably for today. I don't necessarily like to trade IPOs, and I certainly don't like to short them because sometimes they'll just rip a face off. But occasionally I will scalp the hype and fluff that runs them. And, to call history to back in, if anybody's ever heard of Elfin, LFIN, that was an amazing rip from like $5 on up over, $70, $80. And I cleaned house on that one. That did great, but I don't tend to mess with too many IPOs for exactly that reason. Oftentimes things come out later that, kind of condemn it. Who knows what's going on in the news feed for this thing right now, but technical analysis says we've got a couple targets we can certainly hit. And I would say my target would be about $47 if this thing continues to break bearish today. All right, moving on here. He talked about the UAW strike and the situation with Ford, and we're kind of considering along between you and I on Ford, and we're looking at support is kind of right in here.
Yeah, I mean, I look at the 200-day moving average, so it just popped below, so not, and GM looks the same. So yeah, not interesting to me yet, but never know.
It's definitely one to watch, and we know the structure pretty well with price action analysis. I mean, there's a nice measured move up to the top here. We kind of knew where resistance was. We're inside of this bar, and we rejected outside of the top of it. Pretty clean roll down, but if it hits and finds support, probably around half of that move, or it probably ends up back on angular support. If you look at my drawing here, it's looking like a 70s coffee table. There's a lot of lines on it, but these all matter. I'm looking at fan lines. I use this particular analysis style right down to a 5-second chart and pull it out into a weekly chart. Even it makes sense and it works well for me, and it's kind of what I teach. But looking at the structure, it's very familiar. 50% retracement of this is very likely, and we're just about to that today. So maybe if we see a reversal around here, we might show some interest in getting to possibly looking long on Ford, but they're going to have to resolve their issues with the UAW first, of course. Fortunately for Ford, though, America is not their only production spot. I mean, they're kind of a global company and very heavy in the European market. So as long as those markets are happy, I think they've got a chance at making a bullish future. But for now, we'll kind of keep an eye on it. It's certainly interesting to watch it. We'll see what plays out of the structure. If it finds support, we can certainly take some bull moves on it. I got in on the secondary move of this and traded long here, but I took off my risk completely at this point and made a good swing trade on it, more or less. But now I'm just kind of waiting for the next setup. Cash is a good position on this one, I think.
I think so too.
And to see Jim, he's kind of weighing heavy on that. So some of this influence. Anytime you see an analyst talking, you just got to know that there's going to be more attention on that stock, especially if he's got a lot of followers, and he certainly does. It kind of amplifies the move. I've noticed that, and I got to talking about selling options on some of Jim Cramer's callouts just because it gets a lot of volume and attention, and implied volatility goes up. I love the wheel trade strategy, selling options for income on long-term investments, and oftentimes I find very fruitful opportunities whenever Jim mentions a stock I happen to be long on. And that takes me down to one of my more interesting shorts from, better part of last year and about a couple months into this year. It was Disney. And we know Disney is like probably one of Jim's most favorite stocks.
He loves to talk about Disney.
Maybe I should send him those mouse ears. He'd probably put them on.
You need to put an SJIM symbol on them, though.
We'll put it in a fine spot on the edge where it can be seen by the camera, but maybe his vision's not so good. Who knows?
Yeah, he is getting up there. He may not notice it.
But man, I've enjoyed shorting Disney, and every time Jim jumped up and down and said buy, 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 I could almost certainly count on a top tick for a little while there, and just take advantage
Yep.
of it. Um, if you guys have ever watched one of my videos on the diamond pattern, I mean, this is a mess looking situation, but it usually defines where you're going to see a break. Typically, these precede volatility. And well, we've certainly seen some volatility with Disney, and it's in this bear channel. It's been respecting this trend line pretty well. Now it's kind of set up a situation where it might make a reversal here. You can almost see the little inverse head and shoulders, but wait and see. Don't go chasing Jim's dreams down and trying to go long on this just yet, I don't think. Um, do you have a position in SJIM on that one?
On Disney, yeah, we are short Disney.
Very good. I'm liking it. I might consider, if I were short, I might consider kind of taking a little bit of risk off at this point. It's kind of threatening a reversal, but I know better. This also looks like a bear flag, and it kind of looks like that little pop of volatility of buyers coming in to pump it right before it breaks over. So this could go lower, but I would definitely take a little caution on this setup. Sometimes these don't work out, but when they do, they pay very well. Measured moves are glorious. And all you gotta do is trade the secondary. So I could say I could put a target on that right around 79.50 ish. That'd be pretty reasonable if this breaks over and continues to be bearish. Kind of keep an eye on the resistance point up here too at about 84.30. If it starts to break above that, that might be a good time to get out of a short position. But it all depends on where you started. And I know when the analysts started calling out that $88 price target, it was pretty much back in here. Made a nice clean measure move through it, and it tapped it, rejected it, tapped it, rejected it. Eventually it ate through it and then just ripped back down through it. So, c'est la vie. Never follow the analysts. Usually when they give an upgrade or a downgrade, I like to get in and scrutinize that technical analysis. And most of the time I can see that they tend to basically provide liquidity for people who are good at trading. So,
Yep.
all right, moving on. See if we can get into STZ, which was actually a pretty good call out. Jim did good on this one.
Not so much today, though.
Probably not. Over the long term, I mean, this thing's been in a very parabolic bull trend. Made a very clean move. Yesterday, I drew this where analysts were pushing the target up to 307 from 265 here. And oh, man. Yeah, I can believe it, but it's got to hold support here. But looking at things, it may very well be on its way for a retracement of this very parabolic trend here. So keep in mind that it can find support down here. Drew this on about the halfway point of this whole move, and it's about 234-ish would be a good bear target. When we were looking at this yesterday, we noticed that this bear flag was pretty darn prominent. So, I mean, originally, you take a 1-for-1 out of that, and it'll get you close. But if it makes a 2-for-1 and continues to slide, that's the long-term bear target, maybe medium term. Long term, I was saying maybe we could be bulls and trade the rest of this trend on this thing because it is this pretty successful company and it did absorb a lot of market share from the whole Budweiser situation for sure. But making that that upper $300 target up here, 307. Man, I'm just a little skeptical about that in the short and medium term for sure. Long term, possibly. By this time next year, maybe it'll hit that number. But for now, we're rejecting the previous target pretty cleanly at 265, and we're looking for a possible measured move down. And this is definitely a bear flag. And once it cracks that support level, keep an eye on about 256 and 3/4, 256.75, somewhere in there. If it starts smoking through that, man, it'll be down for a nice measured move down and retrace about half of the previous big old bull trend maybe. Definitely keep an eye on it though. I can't remember what Jim was saying about this thing as far as on a show, but I know he mentioned it in his publication.
He likes it. I mean, he mentions Constellation every once in a while. I mean, it's not a sexy name, but he
No.
likes it.
And J.P. Morgan was the analyst that put the 307 price target on that thing, and that was up from 376 was their original target, and then this 3 to 265 area I think was I want to say it was that might have been J.P. Morgan's previous target. I hadn't looked at this in a while. I'll have to do my research and get back on that. But looking at what Jim said, he's saying that they keep an overweight buy rating on it, and anytime a major analyst comes out and says something, I'm always like scrutinizing that price action, and that is telling me I like being a bear. So got a picnic basket for you, boo boo. All right, moving on. Mr. Soft, Microsoft. That's definitely a darling club holding, right? He's always talking about Microsoft.
He loves Microsoft.
Short term, I was pretty bearish on that. It nailed that bear target. In fact, just today, went right to it. Yesterday, when we were talking about this on our, well, it was just basically a phone call between Mr. Tuttle and I, because it didn't go to YouTube like it was supposed to. But we were talking about this yesterday, and like, yeah, we know it's likely to break this support zone, and sure enough, it hit exactly that 2-for-1 measured move with a little overshoot to boot. Now it's looking at retracement back to that previous area. And sure, it can come all the way back up and retrace half this whole trend, but let's look a little further left here. We got a couple of situations. This will either be a nice big bull flag or also the handle of our cup and handle setup. If you look on a weekly chart, you'll see big bull trend. Cup and handle is usually a nice continuation pattern, but they love to have that pullback. That's what that handle is. So certainly take some interest in it soon here. Maybe it'll hold support around this area and finish a flag move, trade in range for a few weeks, possibly a few months, and then we'll see what happens when either this breaks out or breaks down. The cup and handle is another one of those 60-40 patterns, isn't it? You got a 60% chance of follow through and about a 40% chance of failure. It's not good odds, but for the most part, when they do work out, they work out well. So I don't know about a 398 price target being bumped up to 415. That's a little lofty.
A little bit.
But it's certainly within reason in a couple years maybe. Or if the AI thing actually turned out to be more than just a bunch of hype and fluff, we could certainly see that with a nice clean trend here, accumulation here, and a breakout, sure. But, until it breaks this key point up here around 340, I'm a little skeptical about those targets, that's for sure. So short term, definitely looking bearish. Definitely hit the mark for our 1-for-1. Can it retrace and continue down? Anything can happen. The old saying is the market can remain irrational much longer than you can remain liquid. So
exactly.
Never forget that one. That's one of my favorite Warren Buffett quotes right there. But at any rate, it's always a good trade, and that's what you look for. You look for price action. You kind of do your own due diligence. Anytime an analyst calls out an upgrade, definitely scrutinize that chart. It's going to tell you a whole bunch more than what they're going to tell you. And another thing to kind of remember is by the time it hits Cramer's show, you got to realize the news lags the market. The news tells you what already happened. The chart tells you what could possibly be happening and what can happen in the near future. So the chart doesn't lie. The news doesn't necessarily lie either, but they're speaking about things in the past tense more than anything. And I've rarely seen Jim do any kind of real tactical analysis other than being very keen at top ticking things. But,
he is good at that.
He is good at that. So, you kind of got to take that as an entertainment aspect of the show. And we certainly are doing the same thing. We're doing this more for entertainment and education, showing you guys how to do your own due diligence is like my mission in life. And that's the whole purpose of being here today. So, moving on, what's the next thing he was speaking about? He got into Intel a little bit. And I've made some pretty good trades on Intel in the recent past, but I forgot what he said about it on his show the other night.
I mean, he's usually not that positive on Intel. You know, obviously, NVIDIA's his big one.
Right.
You know, AMD from time to time. You know, Broadcom from time to time. He did just make a comment this morning about Broadcom, you know, saying some of the rumors coming out right now about Google aren't true, which means they probably are.
Of course. The whole opposite. Reverse psychology. So
Yep.
I remember there was an analyst target of $32 on Intel, and that was months ago. But if you guys have been following me for a while, I was actually very bullish on Intel after this primary move. I had a $36 target on it, and it moved into the secondary. It was very volatile. It was very tricky to trade this, but it was worth doing, and it worked out great. And ended up extending just a little bit beyond my 36. In fact, I bumped the mean regression of this trend up a little higher than I had it, because I had it at 36. I was looking at kind of this mean consolidation here, more or less. But when you look at the extension on that, it definitely hit it pretty cleanly. In fact, it overshot that quite a bit. You know, it hit $40 and some change at one point briefly. At this point, I mean, you know, this was the dog of the Dow, and of course, Jim was saying, "Oh man, I'm not long on Intel." I took the opposite trade and made very good on that. I did the same thing when Tesla came out of its descending trend into that previous Q4 earnings announcement. I was I felt like the only one being bullish about it, and I started looking into a little bit more fundamental analysis, which I rarely do anyway. I'm looking at technical analysis more than anything, but I confirmed some of the things I was seeing in the technical analysis of it's got to bounce here. So I started looking into some other stuff, and I realized, hey, you know, they're moving a ton of inventory all of a sudden. They're like renting out entire airport parking lots and flying their customers over to pick up their car and drive it home. And in short order through Q4, those parking lots became empty. So, I mean, I was kind of looking into that, and I realized, man, this is going to be a killer outcome. And you know, looking at the history on what I traded on Tesla, that was a hell of a call. This was around the time Q4 was coming out, and man, it was just a beautiful play. You know, I mean, I can't talk about this one enough. I was just so proud of that trade. It was very good, and then I did it again because the primary move was nice. The secondary move was equally as nice. Traded that too, and really enjoyed that. You know, it was a pretty nice pretty nice surprise, earnings surprise, and it was great to be ahead of that by using technical analysis and just basically looking at the previous trend, figuring out where the halfway point was. My first target was 207, set it right there. Nailed that whole primary, nailed the secondary, put the third move on there just to kind of be something to be skeptical about, similar to what we did with Microsoft there. But looking at resistance here in this area, and it certainly rejected that supply zone pretty cleanly, and came back down and hit that 207 damn near again. Now we're kind of trending up, but we had a recent pullback on Tesla, and I think we can go a little further. We could probably see this thing hit about 245.50 one more time before we can decide what to do with it. But you know, the EV market is becoming a crowded space all of a sudden. It just seems like anyway. Even though they don't make up for, you know, a large percentage of automotive sales altogether versus petrol-powered cars, but you know, they do have their own market, and it is getting a bit crowded in that space. You got NIO and a few others that are kind of working in that area. I remember.
Just remember, Jim does like Tesla right now. He also flipped negative right around that bottom in August, and then flipped positive when it came back up. So you've got that headwind against you.
Yep, that's that thing. He's an analyst, and he gets his input from many other analysts. You know, he's always calling out what B of A is saying, what J.P. Morgan's saying. He's kind of picking them off, and it's like I said, it's essentially news at that point. It's probably already happened, and you know, I'm sure there's somebody taking the other side of that trade when there's liquidity to be had there for sure. Anyway, what else we got here? I lost my list. I'm just having all kinds of problems today. I'm sorry, guys. There it is. Okay, so he also mentioned NVIDIA and AVGO, Broadcom there. Let me look at Broadcom real quick. We already know kind of what happened with NVIDIA. I mean, we were all over that. And it was fun. I'll go into NVIDIA's chart in a minute, but it's always kind of fun when you plot these measured moves. And man, when you see a parabolic move on the secondary move, I mean, that just gives you thrills when you're long on the stock, you know. And it was great to trade, but you can never forget to take profit. You got first rule of business: pay yourself first. And that certainly worked out. We didn't quite hit the 2-for-1 measured move target. We knew there was some resistance here, just kind of looking left. We were able to plot some basic resistance zones here, even though we had no history of it ever being that high before. We kind of know where they are. And I didn't have any of the analyst targets put on this one. I don't know that there's been too many analyst price targets on this one because of volatility. They tend to shy away from that sometimes, but looking at today, well, that's a hell of a gap down there overnight. And yeesh. I almost wonder if he top ticked that one and probably talked about it a little bit last night. I don't know.
No, I don't think he talked about NVIDIA last night. I mean, he talks about it a lot, but, you know, definitely. And that was one he got, but, I mean, he's
Right.
also riding it down. You know, I see, I mean, if this market continues weak, I see 400.
Yeah, I can definitely agree with that. Let me get NVIDIA on the grid here. You know, we were looking at this as being a pretty basic top pattern. You got range expansion at the top of a big trend. It made very clean moves. If you guys have been following me, I called out the secondary move on this, and man, it just nailed it. The third move I didn't really trade as heavy on, but I saw that $500 analyst target. I'm just like, I went and looked at it. I'm like, maybe, but I don't know. So I kind of dug down a little bit, and I realized that we did have the setup for a 2-for-1 measured move, but it was not as likely to follow through, and it hit their target pretty nice. In fact, you know, if you go back and look at the earnings announcement from that whole craze, everybody chased it. It topped out pretty much in the upper end of that 2-for-1. There's the top of the 2-for-1. It hit 519.07, close enough. When we put these out there on price action, we like to find them and trade the break of a range. I always say, don't trade the setup, trade the break. And this was certainly a great example of that because we were able to figure out where the targets were. But those targets are more or less a range, so you want to get close. And if you look at this, if you were trading this on a 1-minute chart, you could have picked exactly that point that it broke over here and just started to fade. And the next day, my gosh, that would have been a hell of a fade play, and it was. Fell right through that $500 target, smashed down. We were talking about support at 470 at one point. It even ate through that and went all the way down here, you know, back to 450 and then some. Now, well, things are looking pretty bearish again. We set it up. I drew this yesterday when we were talking to each other and not going on YouTube. I pretty much just draw a box over the primary move and realized, hey, there's consolidation here. It's choppy, but it's there. And we certainly could just drag that over and pick our bear target. And here we are. We made a nice clean over the few days, 1-for-1 move. We're at the target. It's 411 now. Can it go to 400? It certainly can. That is where our big trade analysis fell right in. That's the base, right at about the 390 to 400 mark. So we could still be short on this for a little while, but you know, certainly realize that price target's not necessarily a line in the sand. Sometimes it will hit it directly. Sometimes it'll be close. And when you're trading just the bulk of a move on a breakout, that's all you could ask for. When you start seeing signs of trouble, certainly take profit. Never forget to pay yourself.
Yep.
And certainly don't be paying Jim.
Now, do not sign up for his club or
Oh, gosh.
any of that he pushes multiple times every single day.
Yeah, I remember the days like before you came out with the ETFs here. We used to say, like, literally, do the opposite of whatever Jim Cramer says and you make money. It was true for a while. And then,
I mean, still is. The only time it wasn't true was after Nvidia gapped up.
right,
You know, when Nvidia gapped up, what was that? End of May. Jim was on the Magnificent Seven stocks, and he could do no wrong for 2 months.
right.
But now he's back to being Jim.
Yep. So it's almost like the pressure was on. I'm sure he knows about the two ETFs you're running there, and he kind of straightened up and started to fly right for a little while there. And then, yeah, we just had this recent situation with
Yeah, I
Nvidia.
mean, I think he just got lucky. I mean,
True.
nobody saw. I mean, look at that gap up and look at what Nvidia did. The day before it was selling off. Nobody saw that coming,
Right.
and he just got lucky. He was right place, right time.
Oh, for sure. Yeah, I mean that's sometimes you catch that data when it's making a parabolic move like that too. It's like that's too far too fast. So sometimes sometimes if you catch that just right, you can kind of not necessarily like he was trading into that trend, but he picked it up at just the right time. Got lucky. I was looking at NKE Nike, and that's another one of his favorite stocks, isn't it?
I mean, he's been off the sneaker companies. He got his butt kicked on ON and Foot
Oh yeah.
Locker. So yeah, I don't think you're going to see him saying bye 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 on a sneaker company for a while. He really had his head handed to him.
Yeah, I remember that. He was making all kinds of fun calls on Foot Locker particularly, and I remember laughing at those live on YouTube. I was like, I don't think so, Jim. Not a chance. And yeah, I was pretty much all over Foot Locker and shorting that. But now we're looking at Nike kind of taking the plunge here, and we talked a bit about this yesterday, and certainly it continued that follow through as expected. Now we're in a known demand zone though, and it's a short-lived one I like to call it because it's kind of in part a middle of a trend type of deal. But we certainly hit most of our trade targets for being short on Nike. Certainly worth the swing trade, but now it's kind of looking at that time where you might take some caution and consider exiting a short if you're already in it. But this liquidity zone is going to tell you kind of all you need to know. If it breaks the support level, sure, it can finish that move. But here's where you kind of take caution. And you just sort of pay attention to where there was a previous, demand zone that was tested from A to B here, and then all of a sudden you get that overnight gap and opened right at the top of that sucker and took off like a shot. So it's an area of interest more than anything. And I'm calling it a demand zone in this particular trend on the daily chart. But you drill down into like the 5-minute chart, and man, it makes your chart look ugly when you got too many colors on it like that. But we're certainly chewing through that zone right now, and we could easily hit the bottom of that. But we're at about the halfway point. So it's kind of that if you're already short, it's one of those you might consider taking profit moments. But certainly, if you've got a good position on, you got to know where that resistance is. So if you're looking to take profit on this thing, if it starts breaking out of this range and getting to be a bullish reversal, you know the signs. If you've been short long enough, it takes guts to short something anyway. But if you've been doing it for long enough, you know what to look for. But looking at this, we could certainly finish this move, but certainly be cautious when it starts hitting key levels. So that's all I can say about that one. I remember one time, it had to be like 2019, just before the lockdowns. I remember Jim Cramer being a little bit more into the sneaker business, and then of course through the lockdown, I mean, once the stimmy checks came out and consumers started buying discretionary things with the stimmy checks because they didn't know what else to do with them.
Mhm.
Some people traded them. Many people were trading because they were stuck at home without being able to work. They were locked down, but a lot of the economy was doing great because retail was just selling stuff hand over fist. So technically, you could have threw a dart at that sector and made money. But looking further back, I mean, before that, who would see that coming? We could certainly say, yeah, when the lockdown happened, we could certainly find the bottom and get long on it. Sure, that was a great trade. We did very well with that. But then This is where the real traders were discovered, and a lot of people did very well. You trade a QE market with a continuous bull trend. Sure, you can do very well at it. It's very easy, but then the bear market comes in. This is where the proof was in the pudding, and a lot of people realized that maybe they weren't so good at trading by the time they got to the bottom of this. And this was probably some of the best trading we've had at Bullish Bears for a long time. We were live all the way through all this stuff and just killed that bear market. Did very well with it. We were also using it as a teaching tool, knowing exactly what setups to look for, and the whole. You can flip your chart upside down and kind of figure those out. Okay, well, if you're good at being a bullish trader, you just, when it comes to a bear market, look for the same signs. You can find all the consolidation points, ranges break, and just trade the moves. Very simple. Now, Nike's kind of coming into a support area. It can reverse here, but it's like just one of those areas where you're kind of interested in it, but you're not really going to be interested in going long until you see a clean setup with a clean break. So be patient with that one. Maybe we'll get back into the sneaker market, and maybe we can make fun of Jim a little bit more on that.
Never know. Hopefully Jim will flip totally negative on it, and then it'll go up.
Exactly. We'll have to see what he says soon. Going into the last part of his top 10 thing, he was talking a little bit about Wing, and we got into a bit on that. I couldn't figure out what the ticker was at first, but then I remembered I had drawn on it. It was a nice, clean, bearish 1-for-1 down, and look, today we've basically made a mean reversion on it.
Yeah, nice break of the 200-day.
Absolutely. Right into it. And then it hit that previous analyst target, and that's when things went gunny bags. Well, there's a gap here. It's pretty obvious. Most people knew exactly where to trade that range. Wicked a little bit through it, but now we're making another beeline for the 20 period, it looks like. We could probably even see either today or tomorrow possibly hitting about 165. Boy, pretty nice trades.
Yep.
Let me read the part he was saying about that. He was saying that the, let's see here, the CEO was on Mad Money and talking about it. And then, of course, Wednesday evening, Wing shares were upgraded to outperform from neutral, buy from hold at, let's see, Wedbush, and price target boosted to 200 from 180. And so this is their previous target. This is their new target. And, of course, hype followed that. A lot of people took interest in what Jim said about it, especially with the CEO talking. There was some liquidity to be had here, and let me tell you, being a bear, you tend to realize that the market tends to take the stairs up and the window down sometimes, and when you know, and you can take a very fast short trade on that and do very well with it, and it was certainly the case. So, this news came out yesterday morning, and just a clean gap up. I'm sure he talked about it on his show, and hyped it up, and man, everybody and their mother chased that thing, but it went right to their previous target and fell like a stone. It's good to keep track of those targets because usually those analysts are providing liquidity. They're really good at it.
Yep.
Maybe eventually their targets will be hit in the coming months and years. Sure. The market's going to, like we say, be irrational longer than you can be liquid. But if you get into technical analysis and start seeing what the chart's telling you, you can pretty much ignore all those guys. But don't. Anytime Jim opens his mouth, there's volatility to be had, and that's what we love. So, guys like Matthew and I, we thrive on that stuff, and that's exactly why we're here doing this now. Not necessarily a purpose of throwing shade at Jim, but we're not going to, not throw shade at him when we catch him in the
When shade is deserved, shade will be thrown.
Yes, sir. Absolutely, and certainly, this is another one of those top tick situations right there. He was talking it up, got the CEO on the show talking it up, and man, this is just something that happens time and time again, and we're right here to trade it. So stay tuned. We're going to try and do this every week if we can. I know you've got a trip you're taking on Wednesday next week, so maybe we just do Thursdays. Thursdays look like they might be regular for you there.
You never really know, but next week, certainly, certainly Thursday is going to be the best day for me next week.
Perfect. We'll keep in
or
touch.
Friday, either one.
We'll keep in touch. We'll put a a schedule out as soon as we know. You'll know, and just kind of like and subscribe to our channel, hit the bell, and you'll get notified whenever we're popping stuff up like this. I've been wanting to do this for a long time, and I'm absolutely thrilled to have you on with me. It's great to have someone to kind of bounce stuff back and forth on, talking about stocks. And, I know you probably have very few neighbors who would get together and talk about stocks, but I'm kind of in the same
Very
situation.
few.
I'll go to a shindig somewhere at someone's house, and I know that people I talk to, their eyes kind of glass over when I start talking about stocks, and I love talking about stocks. So it's great to have community resources and talk to people about stocks, bounce things off of each other, and man, certainly having.
Yeah, definitely. That's what I love about this whole community.
And certainly having a very good analyst such as yourself along with me to come in here and just pick over Jim's stuff and get the chance to just throw some shade at him, drag him into the ring, beat him up a little bit. It's awesome. I'm sure we're going to enjoy this for as long as we could possibly stand it.
Yeah, until Jim gets us censored.
Yep. Maybe we'll get a cease and desist letter tomorrow. Who knows? Until then, we'll keep this coming, and we certainly enjoy this. And it's great to have you. And I was kind of wondering next time, maybe get a little bit of a bio on you, if you don't mind. Maybe do a little interview
totally.
style. Get some history and stuff.
Not a problem.
Where
Whatever
this stuff
you want.
all comes together, because that's what we love doing. We love talking to other traders, and certainly you're doing something right, because it's both the SJIM and the LJIM are gaining value. That's all you could ask for in a fund, right?
That is it.
Right on. Well, thanks again for joining us. We'll see you guys next week. We'll get a timeout for Thursday specifically, and we'll get that out as quick as we can, and we'll keep you posted. Again, thanks for joining us. Be sure to like and subscribe, and of course, hit that bell. Get the notifications, because we're going to be talking to a lot of very big names in the near future here. Just to kind of put a teaser out for that, I've got my sights set on a few major players in the market here, and certainly Matthew Tuttle is awesome, and love this guy after my own heart. And we've been throwing shade at Jim for years and years and years, and now we can just get out there and do it more publicly, and certainly do it in the market too.
Yeah.
Thanks again, and this time we got it. It's out on YouTube. I apologize for the snafu yesterday, guys. Thanks again for joining me.
All right, thanks, man.